Hello and welcome to this week's Inner Circle update. So we're going to go through all the markets, see what was of interest to us, and see what's looking forward to the week ahead. Can start off with indexes this week. So we've got the Russell, which has been the one that was overperforming on the breakout into here, had a various stepping processes, ended, and we've drifted back since, but we're nowhere near any sort of level of support at present. Go to the S&P. Earnings season's now over, so the market can do what it wants. We had on one day where everyone headed for the exit at once. It was looking quite weak at one point. We never hit support though, down at 25.58, recovered. But if we don't make new highs today, what is of interest is some daily levels are going to move to the top. So if we don't take out the high of Thursday, then we will build some resistance for the first time since June. So not major resistance, but at least some resistance. Go to the Nasdaq. Had the same pattern on Thursday, but in contrast to the S&P, no levels can move to the top by the end of today. So no change there really. And then finally the Dow. Supports are so far away, they actually have to recalibrate the chart so we can really see what's been going on. No signals at the top. We never hit attack support either, so in spite of that sort of a little bit of a wobble late last week, we never attacked any important levels. It's different for the DAX. We called an exhaustion top on the DAX, I think on the Monday or the Tuesday last week. On this day here, it turned into a UFO, then we had a slam dunk. We've not even got anywhere near the original breakout point of 12,935, so the DAX still under pressure. Just going to briefly explain, for those that didn't watch it midweek, how I called that exhaustion top. So a lot of nonsense is talked about gaps, and the reason why the reason why I called it was because this half-day line, which dated all the way back to September, I think, so a long way back, moved to the top of the trend. So it meant that this high was significant, and so when we gapped above it and then reversed, it told me it was an exhaustion. Yeah. Most of the time you have no idea, most analysis would have no idea what sort of a gap it was, unless it was possibly a breakout gap out of sideways. With proper tools, then you can qualify exactly where you are. And when we look at the short-term chart, we have got a zone of support, so 13,102 to 13,066. Take that out, and then we're heading for that monthly level again. On the Euro stocks, was never really as strong as the DAX, but has drifted back down. But there's a whole raft of minor supports, which are not really condensed enough to be particularly interesting. And finally, the FTSE. We've had this range relativity sitting here for quite a while, but we're going sideways. It looks very much like the Australian market from until a few weeks ago, which had an unbelievable sideways pattern. We called the breakout back in October. Because of the length of the sideways, the energy should be decent, and it's pretty obvious it's the strongest one of the lot. Now on to bond markets. Had the buy signal at support a few weeks ago. We had a target of 154.28 to 55.02. I think we stopped a couple of ticks short. If memory serves me right, yeah, 26. Then we had the reverse signal to say that we're going to rotate back down again. We've had some acceleration. We're bang smack in the middle, but you can only really be short that market. We go to other parts of the curve. Same signal on the 10-year note, but not at resistance. And if we move across to Europe, do the Bund, we failed at a final weekly level. We did go above it intraday. We didn't get any signals at the top, but got some minor support, so a little bit messy. Ideal scenario is actually a bounce all the way back up to this monthly level and then a failure exactly at that point. We do the UK market, where we've already had a rate rise. Had a time continuation, a gap down acceleration on Friday. Moving on to currencies, start with the dollar index. We scratched that trade midweek on, I think it was Thursday. We had the breakout, we held the support perfectly on payroll, 94.11, but then just didn't follow through, so held that position for 4 days and then said we're not really getting anywhere, so got out of it. It drifted back down but hasn't attacked that support of 94.10, which is the critical level. Had some data feed problems. Tullet's FX feed went down for best part of 24 hours, so it was down really from late Thursday and all day Friday. They have filled in the historical ranges, so not much happening on the euro dollar. The Aussie dollar, again, some more profits was taken during the week. It's pretty quiet. Still got the final 1/3 left. 75.25 is the important point, although we did hold 76.25, which was an intraday support. We held that to the tick during the week, which is why we took some more profit. Let's do Kiwi. Stabilised at that monthly level, and those diamonds show the stepping process ending, but otherwise not a great deal going on. And if we do the pound, normal Brexit nonsense, up on Friday, good things about Brexit, down today, more negative things about Brexit, so same old story there, leave it alone. Do dollar CAD. Drifted back, might form a daily support level today, but that high is proved to be a weekly level now at 29.17, so not much to report there. Do the dollar yen. Had a bit of I think a false breakout early on in the week, created a minor UFO pattern, but pretty quiet. We're not really at any supports or resistances. So moving on to commodities, start with crude oil. Had the breakout a couple of weeks ago now. A stepping process ended, so it tells us that trend has exhausted itself. It is forming some daily resistance as well. There is no short-term support there. Monthly level at 59.35, so a few minor negatives on oil at present. Have to see how we get on with that one. Moving on to gold. Gold held our weekly level some time ago, edged higher, was pretty poor on Friday, gave us a time continuation signal, but it's got to take out that 1262 level. Do that on a daily close. That opens up 1210. 1307's been a level where we failed at previously up here, and that's still the reference point. Quick look at silver. Well, that was a bit pointless because nothing's going on. Very, very quiet there. Quick look at copper as well. Had a surge higher in here in October, and we're just basically drifting back. Possibility of getting a time continuation signal today. That gas. Well, everything's still way above. Not much to report there. Let's go on to wheat. Has been of interest to us. It's trying to form a base. Sort of some more levels have moved underneath, so we are monitoring that and looking to try and get long on here. doesn't feel like the right time of year for wheat to do a great deal, but there is some problems in the Australian crop, so it might be something we get involved in. Grains elsewhere, soybeans, pretty quiet. We had another USDA report, which was deemed to be negative, but not really anything of interest there. Sugar is the other one that's been on our radar screens. We've got to take out this level here at 15.17, do that, and we will be looking to get along that market. Moving on to stock positions, no new ones added. There was some day trades on Facebook, Apple and Activision, which is the number one sector, so we're interested in games, but it hasn't. We'll have a quick look at that one. This is SPPI, long from around $8.5. It's biotech, so it's waiting for news, so it's just drifting. Same thing with VSTM, been along that for quite a while. Again, that's been drifting, had taken some profits. It's drifting all the way back towards where our entry point is, but at this stage with biotech it is news driven, so we just have to wait and see on that one. And the last one is Geos. We have 1/3 of that position left. Again, that's drifting back to where we actually got long. It's got that weekly support there, so the stock's fairly boring at the moment. Just going to show how we look at sectors. Activision is in games, which is the number one sector, and Activision is the number one stock in the number one sector, along with GRVY. Results came out. Classic crowded trade. We had the monthly resistance move to the top just before the results. Results were tremendous. It gaps higher. Everyone's already long. It collapses. So we had a 2-day slide of well over 10%, but it could not take out that weekly support. So that was the key level there at 60.36. Did not close above it, below it, and then reversed. But this was an example. As soon as in the first 5 minutes of the trade, of the opening of that day, you sell at the close of 5 minutes, but stop above that high, and you got a nice little day trade there. If I do EA Sports, again, good news, bad action. Their results were a little bit earlier. It never took out this weekly level. It moved the support lower. We held it perfectly on Activision Day. So we're watching them very closely to see whether they can break down. Again, the monthly level has moved to the top, so a lot of the topping process in games has occurred, and we're primed and ready. The one that's leading the way is GRVY. This has been on a rip. It's very, very volatile. Saw the power play buys, breakouts, then we had another breakout here, came back, held the support point, I think to the tick. I'll just put my mouse there. Yep, 46. Well, tremendous. And then surged again, and now had another negative signal on Friday. So this one's very volatile. Keeping an eye on it. Okay, that's probably about enough for today. Thanks. Bye bye.